Do you want to start investing, but feel really confused about where to begin? With so many options out there, it's easy to feel lost. But the truth is, building wealth doesn't have to be complicated. In today's video, I'm going to share the top 5 basic investment tips everyone should know in 2026. These simple tips will help you make smart, informed decisions and set you up for long-term financial success. Whether you're just getting started or looking to refine your strategy, these tips will guide you. Let's dive in and make investing a lot clearer. 1. Focus on companies using new tech. The first tip to grow your wealth in 2026 is focusing on companies using new technology. It's easy to get excited about the latest tech, but let's be clear. The first wave of the AI boom, like investing in companies building chips, is already over. So what's next? In 2026, the real money is in the users. Companies that are taking new technologies and using them to improve their existing operations, whether that's cutting costs, improving efficiency, or offering better products. These are older, stable companies in fields like healthcare, manufacturing, or energy, which are embracing new technologies like AI, big data, and automation to stay competitive and grow. Take the example of a healthcare company that's adopting AI-powered diagnostic tools to reduce costs and increase accuracy. These types of companies are already established, which makes them much more reliable than the startups that often capture the early hype. So, instead of chasing the latest and most volatile trends, consider putting your money in the hands of these innovative users of technology. Look for businesses in traditional sectors that are actively integrating technologies that can lower their costs and boost their bottom lines. Whether it's manufacturing robots or AI-assisted medical treatments, these companies have a lot of growth potential. And by investing in them, you're not only capitalizing on their existing success, but also helping them fuel their future growth. As tech evolves, these companies will have a competitive edge, and that translates into increasing profits for you as an investor. The key here is finding businesses that adapt well to change and using tech to make a real impact on their industries. 2. Move money into real things. The second tip for investing in 2026 is to move your money into real things. Now, what do we mean by real things? It's about putting your money into physical assets that hold or increase their value over time, like gold, silver, and real estate. In a world where global prices are rising and governments are taking on more debt, paper money, like your typical bank savings account or even some stocks, can start to lose value over time. This is where real assets come in. Gold and silver, for instance, have been safe havens for centuries. When the market gets shaky or when inflation rises, these commodities retain or even increase in value. Real estate is another great option. Whether it's buying a property or investing in real estate through REITs, real estate investment trusts, owning land or property can be a strong way to safeguard your money from inflation. Unlike stocks or bonds, real estate generally appreciates over time, especially in growing areas. By investing in property, you're essentially buying a piece of land that has intrinsic value and a long-term potential for growth. By putting your money into physical, tangible assets, you're building a portfolio that's much more secure against economic uncertainty. While technology stocks might go up and down, real assets tend to hold their ground. If you want a more secure, long-term investment, turning some of your savings into things that physically exist is a great way to do it. 3. Pick the middle path for bonds. Now let's talk about bonds, a fantastic way to grow your money with relatively low risk. In 2026, savings accounts aren't paying the high interest rates they once did, leaving many people wondering where to park their cash for better returns. The answer? 5-year bonds. Bonds can be a powerful tool in your investment strategy because they offer a good balance of low risk and higher returns compared to traditional savings accounts. But choosing the right bond is key. While long-term bonds, like those lasting 30 years, might seem like a safe bet, they're too risky right now. Why? Because interest rates are fluctuating, and if you lock into a low-rate bond, you could miss out on higher returns when rates go up. Plus, your money is tied up for decades, which can be a major drawback in today's fast-moving economy. Instead, 5-year bonds are considered the sweet spot for 2026. They offer higher payouts than a regular savings account, but without the long-term commitment that makes long-term bonds risky. These bonds provide steady interest over the next few years, ensuring that your money works for you without the volatility of the stock market. Another benefit of 5-year bonds is predictability. You'll know exactly what to expect in terms of returns, and you don't have to worry about market crashes or sudden interest rate changes impacting your investments. For many investors, this middle path strikes the perfect balance between risk and reward, especially when compared to riskier assets like stocks or longer-term bonds. So, if you're looking for a safe yet profitable option, 5-year bonds might be the ideal choice in 2026. 4. Look at energy and power. Next up, let's talk about one of the most important industries in 2026, energy and power. With the rise of AI, big data centers, and other tech innovations, there's a massive demand for electricity. AI-powered systems, data storage, and cloud computing all require huge amounts of power. So, what does that mean for investors? It means energy is where the money is going. Nuclear power and updated power grids are more essential than ever, and companies working in these fields are poised to see huge growth. Energy companies that are modernizing infrastructure and adopting sustainable technologies are not only ensuring a steady future, but they're also providing more reliable sources of income for their investors. The best part about investing in energy is that it's critical to every industry, from tech to manufacturing. Whether it's companies involved in renewable energy, natural gas, or even nuclear power, they are at the forefront of a global energy demand. As the world shifts toward more sustainable energy solutions, these companies stand to benefit from the long-term transition. Investing in energy companies now is a way to tap into the growing demand for power and contribute to the global energy revolution. Whether you choose stocks, bonds, or direct investments in energy-related projects, energy is a sector that's expected to grow significantly in 2026, making it a powerful part of your investment strategy. 5. Spread your money globally. Finally, one of the best investment tips for 2026 is to spread your money globally. In today's world, it's no longer enough to just keep your investments tied to one country or region. To really diversify your portfolio, it's crucial to look beyond the borders and invest in global markets. In countries like India and Japan, markets are growing rapidly, offering significant opportunities for long-term growth. If you're only focused on your home market, you might miss out on these emerging economies that are showing signs of strong economic performance. India, for example, has one of the world's fastest-growing middle classes, which means more demand for products and services, creating a huge opportunity for businesses and investors alike. By spreading your money across different countries, you protect yourself from regional economic downturns. For example, if your home market slows down or experiences a recession, you still have investments in other regions that could perform better. Global diversification helps ensure your investments aren't overly dependent on one economic system, which provides a safety net against local financial troubles. The key to successful global investing is researching the growing economies and industries in different countries. This way, you're not just investing in companies, you're investing in the growth of entire regions that have the potential to outperform in the coming years. By doing so, you're creating a resilient, balanced portfolio that works for you, no matter what happens in your local market. There you have it, the top 5 basic investment tips everyone should know in 2026. From focusing on companies using cutting-edge tech to diversifying your investments globally, these tips will help you grow your wealth in the current financial landscape. The key is to stay adaptable and make sure your investments are in line with the future. If you found this video helpful, don't forget to hit the like button and show your support. Share this video with anyone looking to improve their investment strategy, and subscribe for more tips on how to build your financial future. Thanks for watching, and I'll see you in the next video.